the US-Iran tensions installs fear among the traders and investors, right? So my point here is that I don't have much of a lower view in the markets at this point of time because the tensions and fears among the traders and investors are not a new theme. Every time there will be such kind of themes will be getting played in the markets. Right? So that is a theme which will be repeatedly played in any kind of strong uptrends. The theme is basically to install the fear among the traders, thereby to create a consensus, like to create in our mind that the war is going to come and that is bearish for the markets, and that will drag down the price against the overall consensus view, right? So that is the kind of fear it installs among the trader. The way we started getting the news, right? So the way we see the global markets and way the markets are opening gap down every day, and of course that theme comes with different stories every time. Of course, this time it is US-Iran tensions, but that kind of tensions are not new. If you're very new to the markets, or probably even if you are uh, really 2 years experience, or even 5 years experience, or 7 years experience, or 10 years experience in the markets, sometimes the different themes would have been played in the markets. Very different theme. Every time the theme is different. Not every time it's the war is the theme here. Sometimes war is the theme. Sometimes you don't know some fundamental reasons. All of a sudden will be popping up. Sometime back it was Brexit, geopolitical tensions, where people are talking about market crashes, and markets are crashing for 1 or 2 days. Entire markets are crashing. US markets are crashing. European markets are crashing. Indian markets are crashing. Indian market, in fact, opened with a big gap down, and despite that, the market stopped doing what it is doing. So those are extreme sentimental places. And then comes the US North Korea tension, and where these are the places the tensions was going on. Anytime that could be an North Korea was talking about building a nuclear ballistic missiles, right? So, and they are sending missiles over Japan. That kind of tensions are happening every day. They are launching some missiles, and there is a threat continuously from North Korea. And literally, people are talking about North Korea versus US tensions, like so. That kind of tensions are happening around 2017-18, and markets have been crashing for 1 or 2 3 days, and then finally it started picking up. And finally, the US drops mother of all bombs, right? And that's again an if you see all these things will be starting at around very near to the earning season or in the earning season. This is mother of all bombs, or all of a sudden a negative news has been circulated among the media, and then it was an earning season, of course, and price opened the gap down, and later on every market started recovering back. So the 2000 missile strikes against Syria, again a similar thing. It's also 14th April 2018, again an earning season, right? So again there was a big gap down, 120 points gap down, and then completely recovered back. So Italian bond crisis, this sentiment was going on for 3 days, and then a complete recovery came after 3 days. And yield curve inversion, this was happening for 1 or 2 days, and then complete recovery started happening. This is latest during 2019, 2020. And then Indian economic slowdown, of course. The slowdown is the theme which has been played during last October season, October 2019. Every day they are talking about a slowdown because the GDP numbers was 5%, and every day they have been continuously talking about an economic slowdown. So if you go back and dig the history, probably the list is longer. I can clearly say that, because every time the market is trend likely to turn up, or the trend is about to build getting strong, these kind of themes will be played before that. Uh, before to that strong trend, such kind of theme will be there. That theme will be continued throughout that most of the earning season, right? So and later on that could be got forgotten altogether. So however, what is the latest theme? The latest theme is yes, Iran tension, right? So where every day you'll be seeing some sort of threats. So we've been talking about these threats, right? So US troops are preparing for the worst in the middle, a long battle with Iran, how Trump decided to target Iran's top general, right? So the question I prefer to ask myself is the fear is already there among the people, or some more left before one more all-time high in Nifty? This is one of the Uh, very subtle question. As a trader, you have to ask yourself why? Because there was an AB poor high in Nifty, so which has the higher odds of taking out in the same series itself. So in order to handle these situations, I'll be going mostly neutral by end of the day until a clear view emerges against the markets. Right. So Tuesday's trading is one such example. There was an gap up and then market chopped everyone, and yeah, it was a difficult market for most of the people, and which is but you think about it, people are likely to carry forward their emotions. Even the same thing happens today as well. Today also people are going to carry forward with their emotions. The threats are there. You can see that every day the threats are there, that's bringing down the market down. Threats are there, markets are coming down, and trends are there, markets are coming down every day. That downtrend is bringing more tensions and threats is getting frequently getting exchanged between Iran and US multiple times. And of course, today Iran fired a missile and said like we had taken our revenge. And so now they said like we done our revenge part. That's what they done, and then they simply closed it. So such threatening days are likely to continue in the near term. This was the thing which I written yesterday, which is very common during earning season, right? Which is very common during earning season. So for no reason, these kind of stuff used to happen during, especially during earning season, or at the start of the earning season. So to prepare for such a kind of direction, I would rather take an intraday approach or some sort of a bullish, hedged bullish strategies. That's what my point here is. And moreover, I prefer to take something like a bull call spread monthly strategies. Like whenever I think emotions or ongoing tensions here in a very short term, especially the tensions are going in a very short term, and market could be reacting to every small or negative threat or negative news. However, I doubt it will last longer. And whenever I feel current geopolitical tensions are open informations to everyone, and media is desperate to give breaking news on that. Media will be now continuously searching for negative news on US-Iran tensions, what Trump is saying, what Iran is saying, what Iran is doing, what Iran hackers are doing. They'll be continuously keep on feeding the news to the traders, right? So, which is an open information. Everyone knows that information. But of course, market is driven by fear. Even today's the market big gap down is because of the fear in the markets, right? So after that, what is happening really important. So whenever I feel taking a positional long trade with a stop loss, whenever I feel that stop loss is risky, of course, in this kind of scenario, stop loss is risky. Wherever you're going to take, stop loss hunting is going to happen in a very short term. And more choppy price action or time erosions in near term. But what I'm thinking here is whenever my expectations about the markets in short term sentiment is bearish, however, medium term sentiment is likely with higher odds to be bullish near to expiry, I prefer to going for a simple bull call spread. So here I was talking about a simple bull call spread, buying an 12,000 call at the money, 12,000 at the money call with shorting 12,300, right, which brings an 1:1 kind of a risk reward. Not exactly 1:1 risk reward ratio, but yes, quite very close to an 1:1 risk reward ratio. But I can say that with a great confidence that the odds of this trade turning into profitable is pretty much higher, especially the expiry. What I'm thinking here is that probably an expiry above the price coming and clearing that AB power high, which is there in Nifty futures, and the price is also coming and closing about 12,300. That is where the maximum profitability starts, and that is the locking period as well. That is, yeah, maybe the price in terms of value it is lower, but in terms of margin, which is roughly around 7.5% of the returns on the capital involved. Capital is kind of 1.5 lakhs is involved over here, but at the same time, on top of 1.5 lakhs, a return of kind of a 10,000 plus with a greater probability because of the market profile, right? So that makes me to take an bullish vertical spreads, right? So for those who want to stay away from fear and to capitalize on fear among the traders without any stops, especially for those who thinks the series expiry likely above 12,300 near to the end of the expiry. So end of the day, stick to your rule book and avoid giving more importance to US-Iran tensions. That's what my point yesterday. Also today, also I'm saying the same point. Don't give any more information to US-Iran tensions. That's gonna be there, right? So I don't know if tomorrow the same US-Iran tensions are gonna continue or not. But as a trader, you should, in order to stay objective, you should stay focused on what the levels you are focusing, what the charts are saying, not towards what Trump is saying, not towards what Iran is trying to do, what the Iran hackers are trying to do, what people are talking about, what the media channels are talking about US-Iran tensions, right? So this is uh, totally a cycle, right? So totally, it's a repeated cycle. It's continuously keeps on repeating every quarter. Every quarter, these kind of some tensions will be there. Every quarter, if you go back and check, there will be such kind of theme will be running on in every Q3 results or Q4 results or Q1 results. That will be every such kind of results will be running in. Right? Probably the experienced traders know that every time there will be a theme, and all of a sudden the theme appears out of nowhere, and the theme gets played in the markets. It creates a consensus, and then market moves against the consensus. Right. So now we don't know how much downside is left. Or tomorrow is also that kind of similar threats are going to happen or not. We don't know. But only thing is we need to prepare, even if there is any such kind of downtrend is there. As long as you just go and do a top-down analysis, top-down analysis is still saying that short-term downtrend is still continuing down. Yesterday it was kind of a balance, but it went up like an inside bar. Inside bar means nothing changed from the previous day sentiment. So yesterday also end like a negative sentiment, and today also so far you see the trend. It's clearly the short-term trend is down, right? So can I claim a reversal over here, complete reversal here? I don't know. I don't know. At this point of time, I'm not seeing any change in the trend, at least in the short-term trend. Maybe from the intraday perspective, it's something different happened. Price opened with an emotional gap down, and then price started shooting up. Probably it even shooted up like an AB elongation, right? So that's the AB elongation, right? We would have been seen some sort of an AB elongation. Let me pull up the Nifty profile charts. So at this point of time, it's clearly saying that short-term trend is still down. Nothing has been changed. So if you are a directional trader, you have to look for rejection setups. Always look for rejection setups. Look for emotional setups. Keep your trade small. Don't look for bigger time trades. That usually gonna hurt if you're gonna be an intraday trader, or if you're gonna even if you want to be a positional trader, positional directional trader. One have to continue the one have to control their emotions, because these are the places all of a sudden market looks bullish and next day bearish, and then the next day bearish it becomes bullish. So such kind of confusions are going to happen in the next couple of days, and then market comes with a clarity. Right? So until then, what the people have to do is that they should not get into a wrong opinions, right? So that wrong opinions is going to hurt the traders especially, and that gonna bring unwanted trades into your setups. So you need to know what kind of markets you are dealing with. So today's market is it's market opening with an extreme sentiment. Extreme sentiment in the sense it's not a good immediately not a good place to take a shot. Probably if you want to take a shot, maybe you need some setups. Right? So buying and selling and gap down is not a pretty good idea. Yeah, the opening confidence is high, but still somewhere you need to start saying that unless I'm not seeing any elongation, I should be waiting for that setup. Right. So the Nifty setup which we've been talking about here. Oops, where it went. Yeah, it's updating. So this 2-day low is going to be the reference. Anyway, there is smooth path has been created. Yesterday, single print has been overcome. The path is smooth. The downtrend is happening without any single prints now. Right? Even today's market also, the downtrend is happening without smooth. Even if the downtrend is happening, right? So it'll be happening really smooth. That means market can go short term in a downtrend, but at the same time, we don't know when it is reverting back. The path is becoming very smoother, right? So probably markets are clearing its path. Even yesterday's how I had seen here is that the single print, it has been completely market does its activity over here. So that we removed that single print over here, and that made the markets way smoother for the uptrend. It's just making a very trend, even though now the price is still going down, but that's fine. What is happening here is that it is just clearing all those single prints and making the market smoother. Uh, right now a lot of confusion is there. Once the clear confusion is likely to clear, right, or probably the things are going even more extreme, there will be a clarity coming in, and then that could go and take this AB POR high. So I'm just thinking that AB POR high will be tested on or before January 30, because January first of February, right? 1st of February, there is a potential. I mean, not potential. The 1st of January, there is an 1st of January, there is an budget is coming in. So before budget, there could be one more all-time high. But before to that, probably very near to the earning season is going to start. Earning season is going to start by this Friday, right? It's a Friday evening. So most likely from Monday onwards, I think the Infosys result announcement is going to be there on 10th of Friday. That is on aftermarket hours, most likely, I guess. So most likely from Monday onwards, there will be a kickstart of the market will be start reacting to the earnings season. So until then, I guess in a very short term, in a very near term, that fear will be installed that will make every buyer into a seller. Once everyone turns into a seller, that is where I think market will be slowly moving towards or slowly inching towards 12,350. Now, how much downside is left? I have really no idea. Maybe we might be done with the downside, or probably some more is pending, or maybe that some more could be even more deeper and then immediate faster recovery. Right. So these are the places you have to be really careful. I don't know, frankly, to be speaking, I don't know how much downside is left, but still that downside is still continuing. Whether it will continue tomorrow also, if you ask me, probably it might continue for 1 or 2 days, max to max, because the earnings season is going to start in a very short term. So until then, somebody has to be really careful at these locations. Any rejections at these levels, go and trade the shorts. Any emotional levels, every emotional levels, one can go and trade the longs, right? So look for emotional places, because market will be definitely going towards an emotional locations, and those are the places traders can make sure to short the markets, along the markets. If you are directional player, look for opportunities, trade the opportunities, get out of the opportunity, right? If you're a positional player, on how to control their emotions, stop doing what you're doing, and probably if you're doing, make sure that you are hedged enough, especially on the long side. You have to be really hedged if somebody is planning to take some long bets, right? So at this point of time, I'm thinking about buying an 12,000 call, and at the same time also hedging with a 12,300 PE writing, right? So that gives an maximum profit potential when this AB POR high is going to break. Probably most of the vertical spreads, if you understand, most of the vertical spreads will be profitable very close to the expiry. So considering that January 30 is the last day for expiry, and the next day, right? So the 1st of February, 1st of February or 2nd of February is where one of the Saturday is going to happen. So after the expiry, it's going to happen. So prior to that, I think this AB POR high is going to happen. So similar view I had right from the start, right? So I thought like market might dip. That dip could extend maybe for till the middle of the week, but that rally is more or less likely to happen. So that is what the view which I am having at this point of time. Frankly speaking, I don't know how much dip is left. The dip can be shallow from here, or the dip can be deeper from here, but the recovery is also equally sharper. Right? That is the view I'm taking over here. So more or less, the view could be something like this. Either from here, it could be a shallow dip, and then it could go up, or probably it can be an deeper dip followed by a deeper recovery. Right? So no matter what, if this is the view, then think about it, how you should be preparing in these kind of scenarios, how you might be thinking from a directional trader's perspective, what you should do. Just think for a moment, and then just plan your trades accordingly. So this is the higher probability odds which I've been considering right from the start of the series. Right from the start of the series, if you ask me, like, so let me go back and go to the previous article which I written about the markets, where the major view been taken over here. So Nifty futures Jan 2020 outlook. So we done a complete top-down analysis. Monthly was up, even weekly was up, daily was up, right? So every trend was clearly up, but daily was going into sideways mode for last couple of days. But at the same time, we also talked about that institutions' activity is likely to pick up, right? The investor community is likely to engage in the markets, which increases the rate of participation, and so more volatility is likely to happen. This was the article which was written on one of the Friday. A Nifty 15-minute charts. I've been talking about the sideways move, and if the price is breaking down, right? So if the price is breaking down this level, especially Monday levels, 12,230 levels, it indicates immediate weakness. We anticipated an immediate weakness over there, and from there, what I was, this is my comment over here. Market profile charts Friday indicate short-term weakness at the Friday open, and value formed lower by end of the Friday session. However, current all-time high is unsecured. That means I was talking about the AB power high. With an AB power high at all-time high, supposed to be an all-time high, which could act like a temporary resistance. Think about that. I was seeing that AB power high as a temporary resistance. However, a fresh all-time high is possibility in the second half of this January 2020. So I was looking for some sort of a time-wise erosion, or probably and short-term corrections in the markets. Short-term corrections or time-based erosions. That's what I've been anticipating. Probably in the second half, more or less, more bullishness could be coming in. Right. So now it all depends how faster the correction is going to get over. Probably I can say that the sentiment is getting extreme day by day. Day by day, the threats are getting exchanged between US and Iran back and forth. Once this is over, once the earning season starts, market hardly starts caring about it. It looks like still it will be fearful. Every day it will be looking like markets is attempting to fall, but end of the day it will not fall. Like something similar to which happened yesterday. The same kind of activity it will be keep on happening throughout the session. So that's where most of the time a trader has to go neutral, look for extreme places. So those are the extreme places you can go and invest. Whenever you are looking for a long opportunity, make sure that you are taking enough hedges over there. All right. So, or if you are a short-term trader, trade the opportunity, exit out of the opportunity. As simple as that. Pretty neat. No carry forwarding business until that things got settled down. Until that emotions goes to an extreme. When emotions are getting into too much of extreme, those are the good places you will be finding in one of the best opportunities. So still market is hovering around that. Activity started building about 2-day high. In fact, previous day high is also here. So still my comment is not so good selling, but throughout the day I would prefer not to do anything as such unless I get more clarity about what the market is doing. So there was a kind of complete reversal. Is it an AB elongation? It is not an AB elongation, I would say that. But what it had happened, what has been happened over here is that it brought an G2 high. So G2 high means tomorrow trader has to watch out of this particular level. If something not serious happens, trend is turning positive, that could bring a strong short covering rally, right? Because it becomes a G2 high. And so my comment here is that G2 high formation is there. Right? So my comment here is low seller confidence. At the same time, G2 low is there. G2 low is there. So, which will be helping us tomorrow what to do. If tomorrow also sentiment is going to be negative, we are not even going to touch today's high, right? So, for the G2 low to so G2 high, right? It's a G2 high. So G2 high. So G2 high is there. So G2 high is there. So tomorrow also, if the G2 high is going to be there, then probably we will be waiting for one more day for the sentiment to bottom out. So anyways, that market is likely to throw a good uh, zone. So that is a good zone to capture. At least at this point of time, there is a 300-point opportunity over here. At this point of time, maybe that opportunity can be becoming like something like an 400-point opportunity. Also, who knows that? Right. So, but yes, if you are okay with the 300-point opportunities, then try to think about it. What is the best way I can capture this with some sort of hedges? This can be captured only with some sort of hedges. You may not get the maximum benefit, but you may be getting a reasonable benefit from these price action. Now think about what is that reasonable price action. What is the reasonable price action? Even tomorrow, even if there is a strong dip is coming in and then it is recovering back, you should be able to get that reasonable amount of that amount was like kind of a 300-point opportunity. You cannot capture the entire 300-point opportunity, but with hedges, what is the maximum opportunity you can go and conquer? Right. So that is a question you have to ask yourself. Right. Otherwise, you have to go long and manage these longs with or without stop loss. And stop loss is going to hit again. You have to take a long. Again, you have to take a trade. Again, stop loss is hits. Again, you have to take a trade. Thereby, the 300-point opportunity anyways will gonna get eroded. In order to do that, without in a passive way, how one can capitalize these opportunity, probably it's going to take a long time. Think about from the time perspective also. I'm not talking about this AB power high will clear day after tomorrow or so. I'm talking about this AB power high will be clearing by probably around Jan 30. So that is a timing I was coming and taking about over here. I was talking about something like an Jan 30, right? I've been talking about Jan 30. So that patiently, what strategy you can execute so that around the expiry, you're going to go and close the session. You're expecting a Jan 30, a fresh all-time high. Near to Jan 30, probably in the last week of expiry and fresh all-time high in making. Right. So in such a case, what kind of strategy a trader has to adopt? So that is the kind of thinking I want you to think about at this point of time. Probably for me, the best way of thinking it happens to me is at this point of time, right? Immediately at this point of time is probably it happens to be that bull call spread. Maybe that which has been happened yesterday. Maybe that opportunity would have been even more bigger at this point of time now. Maybe something like an 150-point opportunity. You may not, as I said, you're not able to capitalize the complete opportunity over here, but most of the thing you should be able to capitalize at this point of time. Let me check what will be if I'm going to execute the same strategy now immediately. So then let me pull up the OA. It's not working. Yeah. So I'll go to the market strategy. I'm going to pull up bull call spread. Right. So bullish vertical spread. Bull call spread. So what is a bull call spread? We learned that a bull call spread is nothing but a long position with a hedged short call. So I'm going to go to 30th Jan. So because my thinking is to hold till end of this expiry, and at the same time capitalize the premium. Let's say that something like maybe what if I'm expecting 12,300, right? So 12,300, probably something like because of this gap down, maybe this gap down would have been even provided an opportunity to test something like this, something like about 12,250. 12,250. That's here. There is something like this. This could be an probably the maximum opportunity will happen over here. Any expiry, the maximum profit potential will be like 12,250 levels. So probably this is also an executable setup. So the maximum profitability one can get at this point of time is 10,856.25, or even one can consider doing a long call of 12,000 because it is a bit cheaper and it reduces the risk a lot, and at the same time moving towards 12,300. So let me go to 12,000, something like 12,300. Yeah, 12,300 here. Right, so at this point of time, this is the opportunity it is offering at this point of time. Maximum risk of 10,000 rupees per lot, and at the same time, that risk can happen if the price is not going to move in your favor, right? So if price is going to stay here, 12,000, and it's going to stay negative throughout the week and throughout the month, no all-time high. In that case, you're going to lose it, and any price move above 12,140, it's going to bring. Since we have enough time, I'm expecting a slow and steady uptrend, and the end of the expiry, I'm expecting that all-time high to be happening before that budget announcement. So that is a place your maximum profitability will be conquered. So there will be something like an 12,000 rupees. Right? 12,000 rupees is the 12,000 rupees in the sense in terms of Nifty points, it will be like so 12,000 divided by 75. It's like 160 points. So you cannot conquer the entire thing, or probably you can simply you can even consider taking a long call, but the thing is that it is not hedged, so that 52 rupees you will be missing from the list. So here you have to lose a maximum money of 14,000 rupees, right? So a short call is added to bring down your total cost, right, from 14,000 to something like a 10,000, right? So 10,000, if you're gonna have this, probably you are still I don't think much of a money can be made because already the premium is 192 rupees. A 12,000 call is at 192 rupees. So already it's at slightly at the money. So 192 premium is too much of premium is still there on the monthly. So since more time is there, if market goes sideways, a lot of theta decay can happen. So this theta decay can be protected with a short call, and even if the market goes down. So that is why I just going for a controlled thing. I'm not looking for a 300-point opportunity, but more or less in 150 point or 160 point should be a win-win situation. That's what I'm thinking at this point of time. All right. Or probably if you want to lower down your maximum profit potential, we don't want we might think that maybe 12,300 may not be sustainable even after hitting the all-time high. Probably if you want to lower down a little bit, you can just go down to 11,950 and then 11,009, 12,250 levels, 12,250 levels. So this way you will be able to conquer even if market is coming and touching all-time high, still you'll be having an additional cushion of 50 points in your favor, especially that too near to the expiry. But in this case, you cannot be you will not be able to handle entire 12,000 points. I mean entire 160 points. Instead, you will be able to capitalize something like 10,500 points, 10,500, roughly around this level. So 10,500 divided by 75, roughly around 140 points, which looks reasonable because I'm also getting another 50 points cushion to manage my trade over there. All right.